Welcome to TIEA Fundamentals, brought to you by Cititrust International. The purpose of this video presentation is to consider the future practical implications of TIEAs in the context of information exchange with high-tax countries. We'll talk about the definition of TIEA, the goals of TIEAs, why they are being signed, the limitations, how tax information will be provided, and what must be procedurally done. Cititrust is an international offshore financial services firm with the highest integrity that has been doing business with professionals worldwide for 17 years. We offer trusts, wealth creation and management, confidential services, tax, estate, and asset planning, and generally only work with qualified professional practitioners who come to us on behalf of their clients. These may be financial planners, attorneys, tax consultants, investment advisors, and others who assist business owners to structure their companies in a way that makes most sense in any economy while limiting liability. So what is a TIEA? The TIEA is a tax information exchange agreement and a treaty between the governments of two countries. Many countries have agreed with other countries in treaties to limit taxation. Tax treaties may cover income taxes, inheritance taxes, value-added taxes, and other taxes. Countries of the European Union have also entered into a multilateral agreement with respect to value-added taxes under the auspices of the EU. Tax treaties tend to reduce taxes of one treaty country for residents of the other treaty country in order to reduce double taxation of the same income. The provisions and goals vary highly, and very few tax treaties are alike. Most treaties define which taxes are covered and who is a resident and eligible for benefits, reduce the amount of taxes withheld from interest, dividends, and royalties paid by a resident of one country to residents of the other country, limit the tax of one country on business income of a resident of the other country to that income from a permanent establishment in the first country, define circumstances in which income of individuals resident in one country will be taxed in the other country, including salary, self-employment, pension, and other income, provide for exemption of certain types of organizations or individuals, and provide procedural frameworks for enforcement and dispute resolution. The stated goals for entering into a treaty often include reduction of double taxation, eliminating tax evasion, and encouraging cross-border trade efficiency. It is generally accepted that tax treaties improve certainty for taxpayers and tax authorities in their international dealings. Several governments and organizations have proposed model treaties to use as starting points in their own negotiations. The Organization for Economic Cooperation and Development Model Treaty is often used as such a starting point. The OECD members have, from time to time, agreed on various provisions of the model treaty, and the official commentary and member comments thereon provide excellent guidance as to interpretation by each member country. So why are TIEAs being signed at all? In the current global financial crises, exchange of information and transparency have become even more important political objectives for OECD member states. International finance jurisdictions are under increasing pressure as a financial crisis forces industrialized nations to seek more sources of tax revenue. OECD member states have started to implement defensive measures against jurisdictions that refuse to sign TIEAs and have adopted a three-tiered grading system for jurisdictions and the level of transparency that they have. The current system is that those jurisdictions which have 12 TIEAs are considered to have substantially implemented the internationally agreed tax standard. In addressing the limited power of TIEAs, information requested by a party to a TIEA agreement can only be processed once the TIEA comes into force. In accordance with the terms and conditions of TIEAs, powers provided by the agreement are effected by request only, and information provided to competent authorities as a result of the terms and conditions of a TIEA are not handed arbitrarily or indiscriminately upon request for tax information. Fishing expeditions, a practice of which is feared by most interest groups and concerned professionals alike, are explicitly banned from practices by parties to a TIEA, as all agreements include a set of guidelines and criteria which must be adhered to by any party which requests for tax information from another. Should information requested by the competent authority be declined, authorities have the right to enforce the terms and conditions of the TIEA by applying for a search warrant, court order, etc. Each TIEA is specific on how tax information is requested. Normally, under the terms and conditions of a TIEA, parties to a TIEA agreement are obligated to provide information held by banks, other financial institutions, and any person acting in an agency or fiduciary capacity, including nominees and trustees. Also, tax information must be provided regarding the ownership of companies, partnerships, trusts, and foundations, ownership information on all such persons in an ownership chain. In the case of trusts, information on settlers, trustees, and beneficiaries, and in the case of foundations, information on founders, members of the Foundation Council, and beneficiaries. Procedurally, the requesting state's competent authority must provide, in order to demonstrate the foreseeable relevance of the information to the request, the following information: the identity of the person under examination or investigation, a statement of the information sought, including its nature and the form in which the applicant party wishes to receive the information from the requested party. In addition, the requesting party must define the tax purpose for which the information is sought, state the grounds for believing that the information requested is held in the requested party or possession or control of a person within the jurisdiction of the requested party. To the extent known, state the name and address of any person believed to be in possession of the requested information. And finally, provide one statement that the request is in conformity with the law and administrative practices of the applicant party, that if the requested information was within the jurisdiction of the applicant party, then the competent authority of the applicant party would be able to obtain the information under the laws of the applicant party or in the normal course of administrative practice, and that it is in conformity with this agreement. And finally, another statement that the application party has pursued all means available in its own territory to obtain the information, except those that would give rise to disproportionate difficulties. In this TIEA Fundamentals presentation, we learned the definition of TIEA, the goals of TIEAs, why they are being signed, their limitations, how tax information will be provided, and what must be procedurally done.